my guess is, just my analysis and nothing more than that, is that that will last throughout the president's term because the president likes tariffs, he likes the unilateral control, he likes the ability of the tariffs to force countries and companies to come to the Oval Office and offer him deals. You heard Scott Bessent talking about, we'll see what these other countries have to offer. The president sees that as him being in the driver's seat economically and then being able to carve out a deal in each case that's best for American workers. And they're very much focused here on workers, not on markets.
Well, they are being transparent, even when they're fighting, to Levitt's point. That's happening. More palace intrigue, I guess. Thank you, Eamon. Eamon Javers.
You bet.
You know, guys, I know that the market is in a good mood now because of the negotiations happening, but there's no negotiations happening with China at this point, even with President's post on Truth Social this morning. And I do want to talk about something that is sort of the... You know, when I see rhetoric like China will fight to the end.
I wanted you to talk about this. I said to Jim, Sarah's going to tell me what's going on here.
Here's what I want to show you.
Why are yields up, Sarah?
China will fight to the end. Here's what we don't want the end to be. So here are the foreign holders of our debt. This is who finances our deficits. This is who owns our treasuries. Japan is the #1 foreign holder, more than $1 trillion. China has almost $700 billion worth of U.S. treasuries. Now, that's come down a lot. Fine. That, we do not want that weaponized. Now, foreigners hold overall about 1/3 of U.S. government bonds, right? So there's a lot held domestically.
Well, the Fed has a lot, right?
Fed has a lot, banks have a lot. So the nuclear option is that China chooses to weaponize treasuries, and then we get into questions about the U.S. dollar. There's not indication, and that would hurt them as well.
Of course.
However, fight to the end. I just want to be aware of this risk.
They've never owned a smaller percentage of our debt than right now.
I said they've been shrinking it.
It's like 2 to 3%.
Right.
I mean, it was a time when it was actually.
By the way, isn't it possible that a lot of other places are selling as well? Aren't capital flows?
Canada's
I mean, yesterday capital flows were not coming here; they were going away.
That's very true, and I also think that there is some just general liquidation of certain strategies going on. You don't have to get into it, but basically there's an unwind of some trades where you belong to treasuries and short something else, short the futures.
So you don't think it's necessarily a reflection of diminishing credibility or concern?
Everything is in
rising concern?
Everything's in the pile.
I think it's not a 0% probability anymore when you have a war against and so far it's just been a trade war, right? We're talking about goods and deficits, trade deficits.
Declared war on 60 countries.
We do not want a capital war, is what I'm saying, and that is not a 0% risk.